Okay. Hello, everybody. Welcome back to another Market Open. It is December 28th, 2022. We have 4 days left to do the stock market, or not the stock market, but to live inside of whatever you call it, or to live inside of 2022. To live inside of 2022. Let me just tweet out live Market Open. Yeah, 4 days left, man. 2023 is just around the corner. It is time, and it's going to be interesting to, to get into the new year. Here we go. We are back into a new year, or almost new year, but we are here ending up the final year. Philip, what's up? Captain Chuck, Gabe, Cameron Investment, Eeyore was right, Uriel, Dex, Damien, Edmund, Ray, I thought I read a little bit of the I'm hungry, and I thought it said I'm hungover, and I was like, oh well, that's interesting on a Tuesday morning. Actually, I was third. Gabe, you were third. Yes. Good morning from the North Woods of Wisconsin. Interesting. I've never been to Wisconsin, but Wisconsin sounds interesting. The Bucks are there, right? Milwaukee, Wisconsin. That is interesting. Hold on, guys. Let me send this one thing in my Discord as well, and then we are going to get started. All right, here we go. Morning, test lovers. Jay Schwad, it's Wednesday morning. Today's not Wednesday. Today's Tuesday, right? Oh, today's Wednesday. Wow. I didn't. Also, Jay Schwad, I haven't seen you in a long time. You've been gone for so long. I have not bought Palantir yet. You buying Tesla today? No, I have not bought Tesla today. I'm being a little bit more conservative right now and not rushing to buy because I'm not super excited just in the moment to buy. Let me just put this in the Discord. It's I don't know. I think 2023 is going to be interesting, especially if corporate earnings fall off a cliff. It's going to be a little bit harder to imagine some of these prices not getting better than they are right now. Like Palantir hit 595 for a little bit, then it rummed up to 618. It's like, okay, that's all right, but I think it can do a lot better than that in terms of getting lower, which is what I'm looking for. So we're going to talk about a bunch of things, and then we'll get into it. The Palantir news I'll cover in a little bit when we get some more people in here. This is a pretty unique article that came out yesterday by the Times in the United Kingdom, basically talking about what Palantir has been able to do in the UK with cancer backlogs. It's important to kind of go through that and understand that. Do you think Palantir can go to $4? Yeah, 100%. I think Palantir can go down to $4. And I actually am waiting for that. I mean, like, I have a big buy ready, but it's not at 5. Like it has to be a low 5. Again, one thing to understand is that the S&P right now is still trading, I think, 18 times forward earnings, and it's supposed to be 14 to 15 on average. So there is another leg down to go for the S&P. But corporate earnings have to get destroyed, right? Apple still put up $90 billion of revenue. Google put up 70 billion. Facebook put up 30 billion. Microsoft put in 70 billion. Like companies still put up. Amazon did 120 billion in 90 days, right? They were still able to put up really good numbers last quarter. So this quarter, if those numbers reduce dramatically, that signals that the overall macro is shifting. That the S&P has to compress its multiples because it can't justify being at those high levels of forward earnings if those companies are decreasing. And I think that's when we're going to see a lot of compression in something like a Palantir that's at 597 pre-market. There is absolutely no doubt in my mind that it could drop much, much more lower as the overall market drops. Now, is there a floor? Yes, I think $5 would be close to the floor, maybe like high 490s, 480s. But, those floors can break through at the end of the day. The Palantir can have its Amazon $100 to $6 moment and then be one of those companies that survives, which if you're going to bet on any company, it would, for me, Palantir is one of those companies I would bet on and make it through the promised land when things are all said and done. But, it just depends on when and how that happens. Tesla up in the pre-market 110. The market cap destruction of Tesla has been one of the most phenomenal things I've seen in my lifetime. And I say this has been someone who's been interested in the markets for about 4 years now. Tesla losing the market cap it lost. Yesterday, it lost like another 30 billion. The past couple days, losing a couple $100 billion, or past couple weeks. I mean, it's just been phenomenal to see this stock absolutely fall off of a cliff. And I don't want this to happen. I'm a Tesla shareholder. This brings me no joy. But it's hard. you start asking yourself a lot more questions about the fundamentals of the revenue growth of Tesla. And I've been actually doing some research on this. And I think the biggest problem Tesla has going further is this idea around, can they build a car that people will actually buy in the $25,000 to $30,000 range? And can they do that while maintaining profit margins that they have today? Because obviously car manufacturers have horrible margins. They make their money off licensing, like the financing of the car, or licensing either leases, insurance, or financing of the car. That's how most manufacturers and like Honda, Toyota, etc. make their money, and they have a lot of debt. Tesla doesn't have any of their debt. They're valued as a tech company, but can they maintain their quote unquote tech margins if they keep selling a car in a recession for $50,000, which is like the base level price you're going to be paying with taxes and some level of FSD inside of the vehicle? And so this is the problem. If I remember correctly, your father is a truck driver. What are his thoughts on the Tesla Semi? Would he like to drive one? My dad does not care too much about the Tesla Semi. He doesn't drive a truck where he's going from like state to state. He drives around New Jersey. So he drives like from town A to town B to town C to town D. So he's driving for a couple hours a day, but it's not like Alabama to Wisconsin, and he's delivering all this like Pepsi or something, right? So I mean, he doesn't have thoughts on. He doesn't drive a Semi, is what I'm trying to say. It's a smaller truck. So he doesn't have thoughts on that, but he does have thoughts on Tesla stock dropping, and annoyingly he bought it in the 200, so he's not happy about that. But yeah, he doesn't have thoughts on semis. It brings me a lot of joy because I can buy more shares. That is true. If you were long, you can do that. Amit, did you check the inventory when the new rebate of 7,500 was announced on 12/21? It's all gone. Yeah, I mean, so this is the demand argument for Tesla, right? And again, I think that the demand argument can be very, very strong for Tesla, obviously. I think the question becomes, in a recession, does that demand hold up? That's it. And there's a good bull case to be made that yes, in a recession, because Tesla's selling to the people that were never going to buy a Toyota, that demand is fine. And then there's just an argument of how bad the recession you can get. And Elon said this himself, right? He was like, if we get to 2009 levels, they might have to go negative on their margins just to be able to sell cars. I don't know if we're getting to 2009 levels, right? We talked about this on the Daily Capital today. The S&P on average declined in 2000, 2008, 58%. Can we get down another leg 30%? The S&P is only down 20% year to date. So if we get down another 30%, Tesla's going to be losing a lot of money on their cars because they're going to have to sell for a loss. People are not going to. The economy will be so bad, people will not buy a car for $50,000. That's just not happening. No matter how rich you are, in a recession, it gets bad. So I guess that's the question. I don't know if Tesla's fully 2009 recession proof. I think 2022 they are recession proof, but 2009 recession proof is going to be a little bit harder for something like Tesla. Admit, are you buying DNA or staying away from it? I'm not buying any biotech yet. Not buying any biotech. I want to wait. I want the macro to get a little better. I need to see, right? DNA I'm bullish on. The problem is, what if they have to do a reverse split because they're under $1 and you have to be at least above $1 to be listed on the NASDAQ, right? That's how bad it could get given the time we're entering into. So I would give it another 2-3 months to really see what happens at the end of the day before I do that. I think the S&P is mostly holding on because of pre-dot-com era companies. They're holding strong. Yeah, I mean, I think big tech companies are holding up the S&P. As soon as Apple, where is Apple right now? Apple was struggling yesterday. If Apple goes down to 115, 120, it's at 130 right now, hit 129 yesterday. If it collapses, a lot of things collapse. It's just that simple. Apple is 7.5% of the S&P 500. It's the good thing for some of these growth stocks like SoFi, right? It's not down that much because it's already been destroyed, right? It's already harder to go even lower than low. But I mean, a lot of these stocks are already down. Palantir, obviously under 5 or under 6, not the best, but it's already been destroyed a lot. So the question is going to be, as we end out the year, where is the floor on some of these stocks? Something like Snapchat, right? Something that has horrible advertising, not the most engaged user base. Do they survive? Or should they be going lower than they are right now at 856? Well, they're already down so much for the year. Something like Shopify as well. I mean, this stock was $170 at one point. It's important to remember that. So a lot of these things are going to be interesting to see as they play out. All right, December 28th, 2022, 9:30 a.m. 4 days left until 2023. The stock market is now open. Wake your ass up. The stock market is open. Let's go. Tesla 110. So a little sharp bounce up. I think the Bulls have had enough of this. They're like, all right, let's buy the stock a little bit. It's getting cheap. So let's see what happens to Tesla throughout the rest of the day. Apple at 129, Meta 116. Meta is up 7.5% over the last month. Apple is down 9%. So Meta and Apple have gone inverse. Palantir at 601. SPY 381. So again, the S&P has not dropped as badly as individual equities, and the S&P is holding strong. So let's see how it continues to go. SoFi at 4.4, Zoom at 65. Zoom's CEO released an article today showing a bunch of stats around the usage of Zoom. And so I'm going to be going through some of those stats as well. There's some fascinating things to see how people are using Zoom. And there's a really good chart showing the global usage of Zoom, which I think is interesting. It doesn't solidify a bull case to buy Zoom, to be honest, but it's a pretty cool stat at the end of the day in terms of what he's creating. Adobe 334, Rocket Lab 35. What do we have? Disney 86. Wow, I didn't even know. I haven't checked on Disney in a couple days. I didn't know it hit the 80s. Disney, yeah, it went back to 95 when Bob Iger was back, but it has not been able to sustain that. Snowflake 136, CRM 129, Shopify 32. And again, when we're talking about Shopify, again, this bad boy was 170, and it went to a low of 23, and now it's up at 40. You know, the bull case for Shopify is like every entrepreneur in the world has to sell something. Shopify is the gateway to do that. And it's like, yeah, that's a good bull case. The problem was the valuation at 176 was insane. And like, I think all of this is teaching us that valuation does matter at the end of the day. And it, forces us to be a little bit more careful to understand some of these larger valuations. Like the bull case on Shopify cannot be just a qualitative analysis. It has to be a little bit more deeper. Enphase 268. I didn't know Enphase ended that badly yesterday. That they're only down 2% today. Enphase yesterday, when I checked it, was 295 in the morning. And I guess I didn't take a look at it at the end of the day. Now it's at 270. So I guess it collapsed yesterday. Let's see how it recovers. I want Enphase around 190. I think that would be a little bit more fair value. I think right now it's a grossly overvalued. There's a little bit too much insider selling. Good growth stock, but it's had a lot of its growth so far. So you got to see where it goes. Let me answer some of these questions in the chat. Someone said, Amit, do you know the Palantir communication was on 23rd? Yes, and let's talk about Palantir in a second. So again, the emergency special shareholders meeting was not that important. It was just them approving some incorporation of an article. I listened to it live. It was like 5 minutes long. Like it was actually not. It was nothing, right? So it was one of those formalities you have to register with the SEC, but it was nothing that was actually that important or had any material news. Amit, thoughts on Affirm? I'm digging through Founders Fund, and it's one of Peter Thiel's biggest positions. It's one of Peter Thiel's biggest positions because Max Levchin is the co-founder of it, and he was part of the PayPal mafia. I do not think it is part of his biggest positions because he believes that buy now, pay later is the future. So, yeah, I mean, I'm there's no bull case to me for Affirm. I know it hit 115 at one point, and it was like this amazing. I've been like, what is the bull case for Affirm? Why is buy now, pay later interesting? What other verticals can they get when it comes into fintech? Like it's just not that interesting, right? Okay, so let's go into this article right here. I'm going to do a separate video on this, but look at this headline. NHS cancer treatment weight reduced in Palantir software pilots. Staff no longer wasting time filling forms and looking up health records. Before we get into this and talk about this for a second, I just want to say, during a bear market, everyone will come out and say that the stock that you picked is down, blah, 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 and they're going to scream and yell and this and all that. All of that is just noise at the end of the day. If you are in 1 or 2 or 3 equities, and I say 1, 2, or 3 because if you have a consolidated position, it's likely about 3, maybe 5 equities at max, then you have to deeply understand what is the company doing, even in a bad time. And in the worst of times that we've had over the past 10 years economically, we have a company that is having software being used to reduce the wait time for cancer treatment in one of the world's, what people would argue, least efficient healthcare systems, which is the NHS in the United Kingdom. So these are the things that I care about. I don't care about the talking heads. I don't care about the noise. I don't like the numbers of the numbers, stock-based comp, all this stuff will work itself out. I care about, does this thing work? Does it have value? And are people finding purpose in it? Because there are going to be companies that don't survive 2023, and there will be companies that do survive. And some companies that do survive are not going to have shareholder returns because they're just going to barely get through it. And there's going to be other companies that are so undervalued in this time, not because, of anything fundamental, just because of the market, that when they do have the chance to operate in a bull market because of the value they provide to the world, there's going to be a lot of momentum behind those companies. I think Palantir can be one of those companies, and these are the articles like I'm trying to look at to get a little bit more analysis here. So doctors are being freed from piles of paperwork by the NHS software that stores all patients' records in one place. The technology used by 20 NHS trusts means that hospital staffs no longer have to waste time filling up records. For Palantir, hundreds of surgeons and consultants, including cancer specialists, are using the software to schedule surgery. The NHS plans to expand it to all hospitals in England this summer. Interesting. So maybe the Times knows a little bit about what the NHS is planning to do with Palantir. The software also means that patients with cancer can be tracked from the moment it's diagnosed, providing a single-digit record of their illness, and doctors and nurses no longer have to rifle through paper records. Reducing paperwork is seen as a vital tool to boosting efficiency as it aims to bring down the record waiting list of 7.2 million. These two paragraphs are important. So the waiting list to get treated for things like cancer is at the tune of 7.2 million, again, because the NHS is a socialized healthcare system, so wait times tend to be longer, wait lists tend to be longer, more bureaucratic, less efficient. Software means that patients with cancer can be tracked from the moment it's diagnosed, providing a single digital record or ontology of their illness, so doctors and nurses no longer have to rifle through paper records, which is like the 1950s, of figuring out healthcare. This is the software that I want to be betting on. Right. And it's articles like these, it's moments like these, it's analyses like these that give me a little bit more conviction around why I invested in Palantir in the first place. The system developed by tech firm Palantir was piloted at Chelsea and Westminster. We saw this in March when we went over that, where 382 consultants are using it. Patients with suspected cancer now, their first appointment on average 2 days sooner, and the length of time staff spending time with them in meetings has halved. Appointments canceled on the day due to avoidable errors with the records have been cut by 56%. I mean, that's phenomenal. I'll do an article and go a little bit more deeper into that, but I just wanted to give a preview that, again, there's a lot of noise. And when you have an equity, and this depends on the single equity. Like if you lose conviction for an equity and you don't see them performing, you don't see them doing anything really good when things are tough, then your conviction might be lost. To me, when things are horrible right now, there is a company that is actually helping people with cancer potentially live longer because they get treated quicker, and because doctors and nurses don't have to go through a bunch of different files through paperwork to be able to figure out how to treat a patient so they can treat them more efficiently. I mean, like, I can't even imagine the amount of people that have died in hospitals just because of bureaucracy, just because of like lack of efficiency, just because of lack of organization. Like it has happened. It's not like it's secret. Like humans are imperfect. Things happen at the end of the day. And if you could solve that with software, how valuable is that software at the end of the day? How valuable is that software globally? And how much of an infantile state is that company that's building that software? Those are the questions I like to ask myself. And at the end of the day, those are the questions that I think answer most questions. Everything else is just noise. Everyone will say whatever they want to say. It's noise. The question is what is being done by the company that's trying to actually build something. Meta at 117, Tesla 112, Apple 130. All right, so we're seeing a little bit more of a green market. Markets are rallying, not just a little. ARK, by the way, has fallen below $30, just hit 30 as they land on it. So markets are tending to be a little bit more green. All right, let me go to Zoom, and let me show you guys a couple stats from Zoom, and then we'll get into some other things around Tesla. So this is Zoom's statistics. Bro, yesterday Tesla 4P was cheaper than Coca-Cola. It's obviously oversold right now. Yeah, I mean, I think Tesla will be a much more valuable company than Coca-Cola. The question, this is the existential question for Tesla. Is it a tech company or a car company? If it's a car company that doesn't deserve the margins or doesn't have the margins to justify anything, then the valuation has even more lower to go. If it's a tech company, then it's undervalued. And I think that's the individual question every Tesla shareholder is asking themselves right now and deepening their conviction on. Did I invest in a tech company or did I invest in a car company that's going to have its margins compressed and demand be destroyed, or not destroyed, but heavily reduced as competition enters the marketplace, which is what happens to every manufacturer. It's why airlines don't make a lot of money because, like the airlines are a cutthroat business. There's no margins versus Southwest versus United, right? So that's the existential question I believe for Tesla right now. I believe it is a tech company, and I believe long-term it will do well. It's just in dicey waters right now. And there's some other concerns I have about Tesla, but I'll get into that in a second. This is the top video call platform in each country. As you can see, Zoom, North America, it's dominated. Even South America, outside of Brazil, it's dominated. China, it's dominated. Parts of Africa, it's dominated. And then India and parts of Asia, Zoom is just not that popular yet. Or sorry, so I meant to say Russia, not China. I don't think it's allowed in China. Russia is the big blue on the right-hand corner, which is dominated. Australia, it's dominated. China doesn't have any. And then Google Meets is the most popular in India. Microsoft Teams and Skype are. I can't even believe Skype is still around. Remember Microsoft bought Skype for like $8 billion. Skype is in some parts of Africa, but the majority of the world uses Zoom. So I think if you're bullish on Zoom and you're bullish on Kathy's bull case, which, by the way, she thinks Zoom can do $70 billion in revenue in the bull case by 2026. 70 billion is a lot of money. I don't know if we get to 70 billion. But if we do, then well, then that's, I mean, like that. This is the reason why everyone uses Zoom. But the question is if Zoom can actually get there. But Skype sucks. Yeah, see, I don't use Skype that much, to be honest. That's not a big. How cool would it be if Tesla used Palantir for their FSD? That would actually be really cool. If Tesla used Palantir for their FSD. Now, granted, Tesla's so vertically integrated, they do not need to do that. But if they did do that, that would be pretty cool. I'm in 3. Yeah, let me know how have you guys consolidated your positions? Are you in 1, 2, 3, 4, 5? And when I mean consolidate, you could have like 20 stocks, but like, are there 3 or 4 or 5 or maybe 1 or 2 major equity positions that you've ultimately established yourself in? I'd actually love to know what you guys are doing. For me, I think it's about 3, and that's it for now. Okay, let's go on to CNBC. Let's see what they're talking about. Now, Elon Musk has been tweeting last night, as always, and he's been tweeting a pretty what you could call extreme, maybe political type. Like, he's been explicitly political on Twitter. And I think this is another reason that investors and institutional investors are having a hard time dealing with some of the stuff that's going on Tesla. But let's take a look at some of this stuff. We have a bull here saying this is a great opportunity to buy Tesla shares. Let's hear a little bit of the bull case, and then we'll go from there.
Tesla having a terrible, horrible, no good, very bad, everything, on pace for its worst ever month, quarter, and year. Joining us now to talk about what is going on is CFRA Senior Equity Research Analyst Garrett Nelson, who's got a buy rating on the stock and a $225 price target. Garrett, great to have you with us. I assume at this point you stuck with your buy rating this whole time down. I mean, it's down 69% this year. I would assume you think it's closer to the bottom at this point. What is the primary driver of this tremendous decline that we've seen in your view?
Sure. Thanks for having me. So obviously there's been a lot of attention surrounding Tesla's sell-off, but to be clear, this is a broader EV sell-off. If you look at Tesla's competitors, Rivian and Lucid, those stocks are down far more on a year-to-date basis than Tesla. So, we think sentiment has really become overly negative, and the recent sell-off has really been exacerbated by year-end tax loss selling, in our view. But if you look at what happened yesterday, Tesla lost over 11% of their market value in a single day yesterday. And really, what news was there out there, except that they're planning to take little additional downtime at their Shanghai factory over the Chinese New Year in late January. And so we think that's really overdone to see that kind of sell-off on that type of news. And by the way, their China factory is only one of 4 factories that they're currently operating. So we think this is a really good buying opportunity following the recent sell-off.
And what was remarkable about yesterday's sell-off was the volume behind that 11% decline. So it wasn't just strange light volume days ahead of the new year, Garrett. It was 3 times the average daily volume over the past 30 days, which means that there's a lot of conviction in that decline. If you think that it's China mostly that bit of news behind the 11%. Once that gets better, I would think that that's something to look through. But then you still have the outstanding issue of Elon Musk's distraction, the possible damage to the Tesla brand, the high interest rates, which Elon Musk himself tweeted about. I mean, the Y and the 3 are some of the most financed SUVs, EUVs in the market, I should say, at this point. These are things that don't necessarily go away, even if the China lockdown is solved. And we just heard from Dr. Scott Gottlieb earlier. He thinks that, this could be waves and waves of COVID here, which could still be disruptive to the supply chain.
Yeah, we think the pendulum has really swung too far in the direction of fear. And Tesla's not being given enough credit for some potential positives that are ahead. One is we think they could announce a buyback. They've alluded to that in the last few months. would likely be in the magnitude of $5 to $10 billion. The company's balance sheet was recently upgraded to investment grade by S&P. So they're really in a lot different situation than other automakers, given their balance sheet strength and free cash flow. And the other thing is that their EVs, the lower price versions of the Model 3 and the Model Y will become eligible for $7,500 federal EV tax credit on January 1st. So next week, those lower price versions will be available for the EV tax credit because of the Inflation Reduction Act. And so
Okay, so as much as Elon hates governmental spending and doesn't like the Biden administration, that $7,500 EV tax credit will help, especially in a recession. Again, the government, this administration wants to be more inclusive of EVs and climate change, so they're giving out that EV tax credit, and that will help Tesla. I guess the question fundamentally becomes, is the demand going to be able to sustain itself in 2023? And I think the basic answer to this question is yes. Unless we get into a 2009 level recession, there is no reason demand is going to fall off a cliff for Tesla, given obviously how phenomenal the product is, how many people want the car. Elon tweeting political stuff, I don't think alienates enough people for demand to actually have a significant impact just because you don't like what the CEO is tweeting. So like, socialists have to shop at Home Depot, and Ken Langone wrote a book called I Love Capitalism, who is the owner of, or the founder of Home Depot. So, I mean, at the end of the day, like, I don't think that's going to have that big of an impact, but we'll see how bad it could potentially get. Here's another piece of news yesterday. Did you guys see this? Amazon declares a dividend of 20 cents. Did you guys know this? I just saw this news. It came out yesterday. Amazon declares a dividend of 20 cents. I don't even know if Amazon had a dividend before yesterday. I don't think they did. I might be wrong on this. If they did, it might have been a very small dividend. But that's, I mean, if you own a share of Amazon stock, you will get 80 cents for the year of getting that dividend. So it's not too bad. John Smith, I listen to you every morning driving home from work. Really appreciate all the work you put in. Thank you so much. Thank you, John. I appreciate it as well. I think having said that, let me do a little bit of a plug right now for me, and then we'll get back into some of the market open. The last day to invest in my startup for anyone who is interested, I'm pinning the comment right now, is January 13th. I got a bunch of comments yesterday and people that were interested who wanted to know when the last day is. For those that don't know, I have a startup called Aldea.io. We have grown 350% since we launched back in August until now, which is in December. Look, I think it can be big. I think there's a lot of opportunities. There's a lot of content I put out there. If you click the link that is in the pinned comment, you can see the pitch deck, you can see the video, you can see the comments, you can see what other investors have said. And most importantly, you can see our investor updates, which have been transparent for the past 3 months. So you can see everything in terms of how the platform has evolved, numbers, etc., over the past couple months. If you are looking to have a little bit of your portfolio move to something that's much more high risk, 99% chance it fails. If it works, it really works. Then you could consider potentially investing in my startup. It's $100 minimum. So we've had people who've invested $25,000. We've had people who invested $100. Just a lot of different people invested, and a lot of different people put their money in. Okay. Amit, what are your plans for with the capital for the money you raised? So we've raised about $315,000 so far. Our main expenses, honestly, are not. We have two fixed expenses. One is a little bit of talent. So I have hired a full in-time videographer who works with me on creating a lot of content. And that I think is way better than spending, $30,000, $40,000 a year into Google and Facebook ads. I'd rather spend it on a person who's actually like helping me build content, because advertising kind of sucks, right? You want to build organic content that gets people to have attention. And then second is our dev team. So we've hired 3 contract engineers in India that are just phenomenal. They've been working with us, helping us rebuild the entire platform. And then we pay for some office space. So we really don't have that many expenses, which actually gives us a lot of runway. Right now, we're looking at around 2 years of runway with the capital that we have. So it's not that many expenses, but having that money in the bank helps us actually build stuff. And, it gives people a chance to invest and potentially have equity in this different startup. What's the limit amount? It's $100. $100. We're trying to raise 500K. We raised 315. If we don't get to 500, that's totally fine. I mean, 250 was awesome for us. So the minimum to invest is $100. Again, people have invested anywhere from $5,000 to $25,000 to $10,000 to $100. And so I've appreciated everyone who's wanted to invest. If you have any questions of this, email me at amit@dailypalantir.com. If you want to hop on a Zoom call, you want to talk, you want to ask me questions, you want to learn more about it, amit@dailypalantir.com. Email me. We'll set it up within today or tomorrow. We'll talk, and we can go from there. All right. Back into the market, we have Palantir at $6.01, Meta at 117, Tesla at 115.26, 555 right now, or sorry, it's up 5.55%. So Tesla up 5%, giving back a little bit of the gains that now yesterday it dropped 13%, so it's down 8% now over the past 2 days. Market cap of 365 billion. Let's look at ExxonMobil. ExxonMobil right here has a market cap. XOM. ExxonMobil has a market cap of $451 billion. So it is more valuable than Tesla right now. And I think there's two perspectives when I say this. Number one, the sort of like not narcissistic, sarcastic perspective is like, yeah, oil and gas is not the future. Obviously, Tesla is the future. Renewables is the future. Therefore, Tesla should be more valuable. That's one perspective. The other perspective is oil and gas is going to be a big part of the future until we phase out to lithium and renewable and solar and wind and air. And I think both of those perspectives are valid. Like ExxonMobil does a really important job for a lot of people that need gas for not being cold in the winter, right? For like going from Germany to France, right? When you need to get on a plane, you can't do that through an electric car. So like from that perspective, oil and gas matters, and these big oil and gas companies do matter. Will they be eventually phased out over time if we can all advance the ability to get sustainable energy, as Elon's goal says? Then yes, which is where the opportunity is for Tesla. But that doesn't mean that ExxonMobil necessarily is overvalued, given that they do create a lot of value for society with oil and gas. The question simply becomes, is that the future? And I think if that's not the future, that's a harder question. Yeah, Myth, this is a great live. Look forward to it every morning. Thank you, John. I appreciate it so much. Videographer for an audio company. Yeah, so it's a videographer because the way you get attention for that audio company is you make a lot of video content and then you drive that traffic. I mean, again, in today's day and age, you either pay for advertisements or you pay to help create organic content at scale. And if you believe in sort of the content marketing thesis, which I talk about in that video on that link, then you'll get a better understanding of like why that's important. So I think that's the argument for Exxon. Let's go to Pepsi. Pepsi right here is at 183, market cap of 252 billion. So Pepsi is still undervalued or smaller than Tesla. Coca-Cola, 270. Oh, so Coca-Cola trades at a lower, or Tesla trades at a lower PE, forward PE than Coca-Cola and Pepsi. So Tesla's market cap is still higher, but the PE, I believe, was 23 or 24, and Coca-Cola's is 25. So that was kind of the interesting news that came out yesterday as Tesla was down over 13%. Let's hop back into CNBC and let's see what's going on. Here's some more bull news. Let's look at some of the bullish stuff. It's possible the U.S. could avoid a recession in 2023. Let's look at what is one of the reasons we could avoid a recession in 2023.
The market is suggesting that the Fed could be moderating its interest rate hikes this year, but Chair Powell has said he's going to go to 11. That's a Spinal Tap reference, not the reference to the Fed funds rate. But is there a risk that he could get more hawkish because he's already said we have more tools in the other direction than we do to tame inflation? We would rather overdo this, overshoot the mark, and then print more money and put more into the system if we need to.
Yeah, I think the Fed has been extremely clear that they are focused on a 2% inflation target, that they don't want to repeat some of the mistakes of the past, and that they're going to keep the level of the federal funds rate pretty high for long enough to convince them that inflation is coming down. Now, what could change that? One thing that could change that would be the unemployment rate rising to a level that the Fed feels is too high. That will be a qualitative, subjective judgment. Something else that could change that is significant volatility in financial markets. I think we could have both of those, or one or the other in 2020.
I'm going to stop that video because, I mean, he's basically saying the same stuff we already know about how the Fed thinks about this. I'm going to actually go to this one instead. What's on the horizon for Apple in 2023? And before I start this video, let me know if you own any of Apple
tech stocks
and if you are bullish on Apple going forward. And then we're going to look at a bit of a conspiracy theory by Mr. Ross Gerber that has to do with Apple and Tesla. So let's take a look at this and then we'll get into that.
Apple shares hitting a 52-week low, but analysts say there are several potential catalysts for growth on the horizon. I want to get over to Steve Kovac, who joins us with that story. Steve.
Hey there, Andrew. Yeah, so Apple shares are also wrapping up their worst year since 2008 on top of that 52-week low. iPhone production problems weighing on the stock this year, but some potential growth catalysts coming next year, particularly in services, guys. In fintech, Apple is expected to launch its buy now, pay later service called Apple Pay Later, and it will also offer a high-yield savings account for Apple Card customers. Advertising is another area to watch. New App Store ads launched this year, and Apple is likely to look to other surfaces across its platforms like Apple Maps and Apple TV Plus to grow that business. Now over to the hardware side. The big question right now is if iPhone demand holds on into the next quarter after missing all those shipments in time for the holidays this quarter. Also expecting that long-rumored augmented reality headset in the second half of the year, and that would make it the first major new product since the Apple Watch launched back in 2015. That's 8 years. Puts Apple in more direct competition with Meta, and Tim Cook and company will have to make a compelling case for the device that Meta has failed to do so far. But some pockets of worry too, guys. Dollar expected to remain strong, at least for the first half of the year. That hurts Apple's services business, and App Store spending has been falling, by the way, all year, which Apple blames on a drop in gaming sales. Andrew?
Steve, I mean, when you look.
Bro, I'm not gonna lie. Why did he say it like he was like he said it like he was like jumping up and down. He said it so quickly. Like you definitely say that. He said his whole spiel so quickly and so robotically. Like it could have been a little bit more natural, my guy.
Just at how investors are supposed to think about this for 23. What's the answer here?
Look, right now we're facing this environment where everyone bought everything. Those first 2 years of the pandemic, there was this huge pull forward demand, particularly for Apple and the Mac business. By the way, Apple warned, Andrew, that the Mac business is going to drop significantly year over year this quarter because there's just such a huge influx of demand in the year before. So there's that issue, and whether or not they can keep demand going, at least on the hardware side. And then all these attacks from regulators, like we were talking about yesterday, on their services business. And then that strong dollar has just forced them to raise prices in places like Japan and Europe.
I just wanted to ask you one sort of curveball question.
Sure.
You've been talking about TikTok all morning and what's going on in the U.S. government related to TikTok. And I'd raised this question just a couple minutes ago.
I heard you, yeah.
Is there any pressure on Apple to try to either ban TikTok itself from the U.S. government and the sort of cross currents and complications and conflicts, if you will, of the relationship that Apple has in China?
Yeah, this is so complicated. And look, we know that Apple has sometimes had to kind of, I guess, for lack of a better term, compromise on their values when doing business in China. But here in TikTok is a different case because as long as they adhere to those App Store rules and Apple doesn't have any evidence that they're purposely breaking or accidentally breaking those rules, then it's allowed to stay on the platform. It's I'm not aware of any kind of rule that says customer data can't be stored in China in the App Store. So if it's not violating the rules, Apple kind of gets to wipe its hands clean. And keep in mind, big developers like TikTok, Andrew, and Facebook and Twitter and so forth, they talk to Apple on a regular basis, usually a weekly basis, these major apps that are a big part of the app or the iOS app ecosystem. So they're in constant talks with Apple for sure to make sure
If they're in constant talks with Apple, I wonder what Zucks says to Tim Cook on their weekly little phone call. Hey man, thanks for fucking my business. How's the week going? Like, come on, bro. That's crazy, bro. Like the power that Apple has is just insane. And it's not going away because Apple made the App Store. They own everything. Speaking of Apple and power, Ross Gerber, our favorite Tesla bull, which, by the way, I think on that Twitter Spaces, so I'll get into this after I read this tweet. So Ross Gerber says these are all short-term issues. Things will work themselves out. Maybe Elon ends up working for Tim Cook after all. Hashtag Apple, hashtag Tesla. Now, someone says, why would you say this, Ross? Please explain. Ross responds, Apple has failed to get into the EV market for years. Finally, Apple Music makes it to the Tesla screen. Imagine the whole Apple ecosystem in a Tesla. Apple is a $2 trillion company with cash. Tesla is $350 billion and accredited for earnings. They should bid $500 billion, but Tim is not aggressive. Now, here's the problem. Here is the problem with this analysis. I don't think any Tesla shareholder would be happy. I think very few of them would be happy to get a buyout at $500 billion. This is supposed to be one of those companies that is supposed to be more valuable than Saudi Aramco and Apple combined. That's the bull case for this company. ARK says Tesla will do $843 billion in revenue by 2026. Yes, I said this again, $843 billion. That's almost $1 trillion in revenue in 4 years, or 3 years. In 3 days, it'll be 3 years. So when you really think about this, Ross Gerber saying this, it seems a bit like he's annoyed that the Tesla stock is down, which again is why I'm not the biggest fan of Ross. I mean, I love Ross. He's a funny guy. He's a great guy, smart investor. But on the Twitter spaces that he was on with Elon the other day, he said, Elon, what are you going to do about Tesla? What are you going to do about Twitter? He was crying about it for the past couple of weeks. Elon says, don't worry about Twitter. It's only 10% of my time and I won't sell any more Tesla stock. And then Ross makes a tweet, complimenting Elon, saying, thank you so much. This was awesome. I'm happy you answered our questions, blah, 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 blah. And my response in the comments was like, Ross, you didn't even push back. I was like, you've been saying for the past week, like just hammering down. And then when he finally talks to you and you have to go face to face like a man, you don't even push back. When the guy says, don't worry about Twitter, I'll figure it out. Now the stock declines more and you're back to your crying and whining on Twitter. Look, I'm not trying to blame Ross or anything. It's just going to this conclusion that Apple should be bought out by Tesla to me is a bit ridiculous, or Tesla should be bought out by Apple, because Tesla has the potential to be much more bigger than Apple could be. Just like the energy business alone for Tesla, I know it's not developed yet, but that's growing like 80% year over year. If they figure that out, how much more valuable is that than an iPhone? And so like energy, the world uses energy, right? The world doesn't have to use an iPhone, even though the iPhone's valuable. So the idea that Apple should buy them out to me is just, it's not an interesting concept at all. Ross Gerber acts like an emotional retail investor and has shown he has over $1 billion under management. That's freaking scary. Investing industry full of emotional hysterics. Yeah. And the reason why Ross Gerber, I saw him on a podcast once, he says he's unemotional about stocks. He says if it falls 10 or 15%, he just sells. Like that's literally what he said. If it falls 10 or 15%, I get out of the position. I don't care. The problem with Tesla is he's in love with Tesla and he can't sell. He's also built his entire personal brand off of Tesla. And so, I'm sure he's made a lot of money out of it. I'm sure he genuinely believes in Elon, but just because Tesla falls 10, 15, 20%, you can't just unemotionally get out of that stock because you have an emotional connection with it. So as a result of that, he goes to tweeting to suffice his anger for Tesla. He doesn't talk to Elon like when he has the chance to talk to Elon on Spaces and really presses him. He just lets it go. And he tweets out these ridiculous things. I do not think Apple should buy Tesla, nor do I think Apple would ever want to buy Tesla. I don't think that would be, I mean, Apple, do you think Apple wants to deal with Elon Musk tweeting political stuff all day? Like Apple's one of those companies that tries to stay out of those things. So I wouldn't imagine it happens. All right. Chicken Genius just put out a video on Tesla. Now, for those that don't know, this is a public YouTube, there's a 2-minute video. This is a public YouTube finance creator. He said to not buy Tesla until it hits 140. This was back when Tesla was around 300. It got to 158. He bought Tesla, which didn't make any sense because the dude was predicting it would go to 140. Now it's at 110 and he's down on Tesla. So here is his video trying to explain his advice. Let's take a look at this.
Hi again. While I've been getting a lot of thank you messages for saving your portfolio, and I can't reply all, firstly, you're welcome, but credit goes to you for taking action. While it wasn't easy, as you know, the shitstorm I had and the decision you had to click to sell, it's worth it. Second, I also recognize that some seek bias confirmation from the toxic bulls, from the buy the dip, no-brainer, easy money, and all got wrecked. Wake up, nothing is easy in life. If it was easy, it has no value. I care, that's why I'm doing this video. I'll divide this video into 2 sections. Taking a step back of the fundamentals, do you buy, hold, or sell? Fundamentals, let's talk big picture. I still believe that Tesla is the best company on this planet. They make great products, so much so I broke all my rules to buy a little stock. Actions speak louder than words. However, as an investor, you need to separate your emotion. 99% of investors can't. And I find it hard at times too. If you follow my tweets, after adding 7.5%, I cut half my position, took the loss. If I didn't, I would have been down an extra 100K. At a certain point, you just need to put your ego aside, live to trade another day. You see, 10 years from now, I still believe that Tesla will be the most valuable company if they solve FSD. If. Now, do you buy, sell, or hold? First, I'll cover sell. Answer is pretty simple. If you are using margin or leverage, sell. It's the same advice I.
Okay, so interesting. So now the point he makes about FSD is actually very interesting. Elon said in an earnings call, the last earnings call, that Tesla is worth $0 if they don't solve FSD. He's like, the difference between Tesla worth 0 and a lot is FSD. So he is right about that. FSD needs to be solved. They're getting closer to it. It's a hard problem to solve, but that unlocks the robo-taxis, that unlocks the fleet of vehicles being used. I mean, that unlocks the productivity increases, that unlocks just so many opportunities. And it's one of those things where, like, if you can get the world's computer into a little box with a touchscreen, then you can unlock trillions of dollars of value. If Tesla can get cars to drive themselves, even if it's years away, they can unlock some trillions of dollars of value. The question is, how close can they get there, and at what do they have to give up ultimately to get to that point? So that's it for me, everybody. Thank you all for being here. Someone says, can you address echoes, please? Look, at the end of the day, people can make whatever videos they want. It's okay. It's business. It's media. My conviction around Palantir remains strong. I have another video coming out today, again, with the NHS cancer treatment, weight reduced in Palantir software pilot. When it's a bear market, people will say whatever they want to say. That's okay. That's fine. It's the internet. You can make whatever videos you want. I remain strong in my conviction, and I will continue to make content around the companies that let me just say this to end it out. There's a difference between making videos about AMC and GameStop and then analyzing a company like Palantir, which, by the way, why do you guys think there's a big community for people that care about Palantir stock? Like, just take a second to that. Why is it because it's a hype stock? It's a meme stock? Is it because people are chasing the next 20x? Why is there that community? The reason there is a community, for those that don't know yet, for Palantir stock, the number one reason is because it's a hard company to analyze. It's that simple. It's a very complicated company. Why is there that big of a community for Tesla? Because it's a very complicated company. Complicated comes from the philosophies of the company, the government work the company's done, the technology the company does. I mean, look at all the people I've talked to over the past year just to get an understanding of, like, what the hell the software even does in the first place and why it's valuable. Not because they're secretive, but because even if they gave you the secrets, do you know what an ontology is? Do you know what Apollo actually does? Like, do you know what, autonomous simulations of software being done over the air across different centralized sources or disparate sources that take centralized sources and put them together? Like, this is complicated stuff, right? And so I believe the community around Palantir exists primarily because you need people that can break down this company, that are willing to put in the work to build the content to show people what this company does. And then people can make the decision if they want to invest or not. I think Palantir is different from AMC in that regard. AMC are people hoping it goes to the moon for a movie theater that, like, is not going to go to the moon, right? It's just like, it doesn't matter. It had its GameStop moment and Robinhood and all that stuff, and it's over now. Palantir is one of those companies that I believe there's such a large trajectory and so much potential therefore, and you need to analyze that. And so that's why I make that content. That's why I analyze it, and that's why I try to go a little bit more deeper into it. So anyone can make videos when they want. It doesn't affect me. It's totally fine. But I will continue making videos on companies that I like to analyze and continue to provide value the best way that I can. That's pretty much it for me, DRK. Good to see everyone who shows up to this morning stream. Thank you for being here as well. What if Chat GPT solves FSD? That would be kind of crazy. Oh, by the way, hold on. Let me show you guys one more thing before everybody leaves. This is one of the reasons why Chat GPT might end up beating Google. Okay, this is what I searched on Google last night, and this is the result I got. I typed in Avatar 2 box office. Look at the first result. Okay, so I got some of the answer, right? 253 million. I got that right at the top. The first link is free download Avatar 2, The Way of the Water, full movie online. I clicked on it, and it looked like it just had a virus waiting for me. Like, it was like, hey, come on, sign up for the virus. And I'm like, how is that the first result of Google, bro? Like, at some level, they got to be able to filter, like, hey, we should not show this link as the first result, because if someone clicks on it and signs up, they could, like, get their account hacked or any of that other stuff that happens. So that might be a reason why Google loses to Chat GPT-3, because they're showing viruses as like the first search result. So Not gonna lie, I wish bro, you know AMC is crazy. When my mom bought AMC at $4 and she sold it the next day. Oh no, she bought it at 16, sold it at 21. This is February 2021. She made $1,000 in one day. When my mom is making $1,000 off AMC, you know that this is a little bit of a different company that doesn't have too much analysis behind it, but rather is just a stock that is in the meme category. So I don't think Palantir is that category. I think there's a lot to talk about. All right. Thank you, everybody. I will see you guys in a couple more videos later today. Watch out for the Palantir video. This article seems really good about NHS cancer treatment, so I'll dive deep on that, and we'll keep going from there. I'll see you guys, everybody, tomorrow on the Market Open. Thank you, everyone.